microphone, but I'll use it anyway just in case it helps. So before we dive in, some of you may have been to our talk last year where we spontaneously did a bit of a parody of Lord of the Rings. Unfortunately, this didn't go down quite as well as we had hoped. One of my panel, who I won't indicate who he is, but I will say it's he, was a bit disappointed by the character that he was given. So when we decided this time to do a parody of Harry Potter, he said, no, I'm not getting involved, not after last time. I said, that's fine, we just won't give you a name. So for the sake of this panel, he won't be named, and we will plow on as if that wasn't an issue. So before we do start, I'd like each of my panel, who are the people you're really here to listen to, it's not really here to listen to me, to tell you just a little bit about themselves and what they do in the real world, and then we will dive into the Ledger of Secrets. So should we just go this way, Dan?
Hello, good morning everyone. My name's Dan, I'm CEO and co-founder of Recap. We make UK-focused crypto tax software. We've helped thousands of individuals and companies file a crypto-related tax return, and we're the only crypto tax calculator that's end-to-end encrypted. So when you use Recap, your data stays yours. It doesn't go anywhere else.
Hi, my name is Jamie Nuttall, and I am a fellow member of the ACCA, director and shareholder of Minor Accountants, one of the leading crypto accounting firms in the whole of the UK. I've personally been in this space since about 2018, trying to help mold and put forward ideas and really change the landscape where possible with my esteemed panel and some others who are in the audience rather frighteningly. But I'm sure between us we should be able to answer most questions today. And yeah, I'm looking forward to being part of this once more. And I did not mention that I'm a Disney tribute band, so it makes a change.
Hi, I'm Louise. I'm a tax director at Wright Vigar Accountants, head of crypto. All day long, I just spend all my time helping individuals with crypto problems, businesses with crypto aspects to their company. Yeah, we help with all the compliance, all the normal tax and accountancy stuff, but then we do loads of really exciting planning with people, which is what everyone wants to do. They want to save their tax.
Hi, I'm Ben Lee. I'm also, believe it or not, a tax and accountant advisor. I'm a chartered accountant, chartered tax advisor. I'm partner at Anderson. We have a specialized crypto team, and we too help individuals and businesses with their taxation problems. It's a theme. I can also now say, sorry, it wouldn't be a crypto conference if I wasn't shilling something. This is entirely new for me, so apologies for the self-brag. But we've actually written a book. We can say we've written a book on crypto taxation. Dion's avidly taking a photo of it right now. We've got some of these at our stand. We are talking about Harry Potter and tax today, but move aside J.K. Rowling, because I think this is going to be the best seller of 2025. So if you'd like to grab a copy, we've got some leaflets and various other things at our store as well, so come and see us afterwards. Shill complete.
And finally, I'm Mark. I am the General Counsel of Alchemy. I am the least serious of the 5 people up here. Prior to joining Alchemy, I specialised as a lawyer in international finance, and I've been in tech since around 2017. So, on with the talk. And to set the scene, I am a bit of a naive individual, which is, for those of you who know me, incredibly accurate, who has been trading crypto in the cupboard under his aunt's stairs for a few years. And I've now made enough to buy myself a Firebolt, which I'm very excited about. None of this Lamborghini stuff, I'm too young to drive. And I need to know what I do with it, because all I can see is on my computer, I've got wallets with lots of numbers in them, and I don't know what to do. So I'm going to go to crypto school and meet my 4 teachers and have lessons. And I should just say at the outset, this is very much designed to be interactive. Please, if you have questions, do just ask. One or more of us should be able to answer, hopefully. And otherwise, we will leave a few minutes at the end if anyone has any burning questions. So I'm going to start my journey with Louise, who is going to explain to me, what happens that first time somebody who may never have engaged with a professional advisor comes over to them and says, I have an issue, what do I do? So, Louise.
Cool. most clients, when they come to us, they've been thinking they've got a problem for a while, but they don't really want to face it. And it's just taking that first step of talking to someone who knows how to deal with it, and they will totally guide you through that process. I would definitely recommend, of course I'm going to say that, I would definitely recommend talking to an expert, because not all accountants understand crypto tax. And if you've got an expert, then like between us, we've got so many years experience in this field. We know your language, we know the kind of things you've been doing, and we understand how to deal with the tax. And so we can really step by step take you through that process of why it's important, why you now need to be getting your ducks in a row. Or goblins, I think you would say, wouldn't you, Mark?
I would. I'm
Sorry.
a bit disappointed by how hard you emphasise the word so many years of experience. We could have definitely started a bit softer on the so many years, but
Yeah.
yes, absolutely.
The time is now, and the reason why is because up until now, HMRC have been in what I would call an educational phase. They've just been sort of helping taxpayers understand what the rules are, like trying to encourage them to get their taxes in order. But now we're seeing so much activity from them in the last year or so, like nudge letters where they're saying, we know you have crypto and you haven't been declaring it, or you haven't been declaring enough. And when you get to that point of getting a nudge letter, you really need to fess up and declare your taxes. Jamie's going to talk about this in a lot more depth later, but we've got the CARF rules coming in where from January next year, within 3 months, about 66 jurisdictions all around the world, the crypto exchanges are all going to be reporting your data, your trades, back to HMRC automatically. And the reporting isn't going to start for a short while afterwards, but all of that data is going to be collected from January. So there's no hiding from it anymore. And it's really now the time to get in first, volunteer your tax before HMRC come after you. I would say find an accountant who knows what they're doing. You're going to have to do some KYC and onboarding. Like most accountants are going to want to screen your wallets. They're only looking for sanctions and high-risk activity. But the point is they will take the burden away from you. A lot of my clients are very emotional about it. It's been eating them up for years. And the point is talk to someone. They will help you get to a position where you can bring all your taxes up to date. And then, like, the most exciting bit we can do from then on is really do some proactive planning. Once you've got your figures up to date, you can work out your cost basis. If you're wanting to sell out or move to a company, we can really help optimize that for tax purposes once you're in a position of knowing where you are.
I think the pseudonymity of crypto has always been one of its appeals, and that doesn't immediately marry up with the idea of KYC and AML. And I know from my own experience being with a blockchain business with a token, that when you start to ask your token holders to KYC, you get a lot of negative feedback. But I think, Louise, we would say that it's not a question now of if, it really is an inevitable question of when you're going to have to go through this process.
Yeah, for sure.
Yeah, and we see that now with exchanges and protocols. More and more are going that way, and that will, I think, be a constant evolution. It was once said that magic was simply science we don't yet understand. And given how little I understand, that makes most things in life magic, which is wonderful. I'm still looking forward to seeing a unicorn sooner or later. But when it comes to magic in this context, then there is no better person to talk to than Dan, who does things with computers that I can't even begin to explain. Don't worry, this is a PG-12. There's nothing too serious with the computers. And Dan, do you want to tell us a bit more about how you and your team have sort of addressed this kind of issue from people having no real records, maybe many years of trading, and then they've met Louise and gone, well, I've got to do something. So what next?
Yeah, sure. I think Louise gave a very good breakdown there of how you start the process of becoming compliant, and it's a bit of a journey. And throughout that journey, you are going to need some kind of crypto tax software to help you get to that filing position. So this entire talk is called HMRC and the Ledger of Secrets. We all have a ledger of secrets. We all have activity on exchanges, on wallets, various blockchains. Maybe some exchanges have gone bankrupt. It can be quite difficult to find those particular ledgers. And as Louise mentioned, compliance is really kicking in next year. So the half of your ledger of secrets that's on-chain, all of that information is going to be reported automatically to HMRC every year. And our kind of job at Recap is to get you in a position where you can file, but making sure what you file actually stands up to HMRC's expectations. Because now they're getting this new information on you, they can risk profile you, and they can start to ask questions. So for us, it's about getting you into a position where you can file, but then equally, we've got all the facilities and records where if HMRC do come calling with questions, we've got the evidence there ready for you to fight back. One thing I wanted to mention is just how difficult it still can be accounting for your crypto taxes. And just a few kind of lessons that we've had in working with clients over the last 5 to 6 years. The most prolific issue that we face actually at the moment is just really poor exchanges. So we had a client come to us this year. They are under HMRC inquiry. They want transactions going back to 2020, and we actually can't get those transaction records from that particular exchange. Or we couldn't at the time, and then we emailed them, and it took 6 months to get the data, and then the data was in a rubbish format, and then 2 months later, we actually got the data. So the client was under time pressure because they had an inquiry. They actually couldn't get the data from the exchange, which then stressed them out completely. So what I would say to all of you guys, if you want to make your tax filing process simple and straightforward, choose an exchange that you know is going to work well with your crypto tax software. The crypto market's really broad. You have people that trade NFTs, you have people that trade options, futures, perps. It's almost impossible for a crypto tax platform to support all of those different personas in crypto. So find an exchange and crypto tax calculator that works for you in that process. And then kind of secondary, don't forget your on-chain activity when it comes to accounting for your crypto taxes as well. So we've talked about HMRC getting effectively oversight of your on-exchange activity. But you've also got to account for your wallet-based activity. And one kind of hint that I would say to you on that is don't expect your crypto tax calculator to automatically reconcile all of your DeFi transactions. So each DeFi protocol is different, each smart contract's different. It's impossible for a crypto tax platform to determine where are the tax points, to make decisions on beneficial ownership, to look at controls. So you will need advisors like these guys if you're on the bleeding edge of crypto interacting with these protocols to help you reconcile those transactions. And then finally, just make sure you're using some software that works for the UK. The vast majority of the crypto tax calculator market are companies in the US that have a UK proposition. I would just be skeptical about that coverage of the UK market and make sure that your crypto tax calculator is abiding by UK rules.
Thanks, Dan. I think when we look at crypto, there are so many different triggers for taxation. You've mentioned exchanges and DeFi, but obviously you've got things like mining, staking, liquidity pool extraction, and various others. In a few words, I am not a man of a few words. In a few words, I mean, how does the software deal with all of that, where you have people who could quite literally be making 20, 30 taxable transactions a day, you know, if you are staking and providing liquidity and others, you know, how does it break it all down? Because the sheer quantum of data must be huge.
Yeah, I mean, we have some clients that have like 400,000 transactions. So the job of Recap is we'll connect to your your wallets, and we'll ingest all the data that's coming in from the blockchain. We'll try and reconcile it as best we can to get you that clear tax position. If you're trading on an exchange, then we have API integrations that basically just make that process like really straightforward and simple for us to get access to those transactions.
I mean, it is, you know, on a more serious note, it is vital to get this right. You know, it is intimidating, but, you know, it is something that getting it wrong has significant consequences. I'm going to move on to Ben now. I said to Ben that I really wanted him to be Hagrid. I really wanted, you know, Ben's love of various things. Just take a look at some of the wonderful things that he's got. Would have made him the perfect Hagrid for this. Unfortunately, we're not allowed to bring creatures into the venue, which, you know, leaving some jokes about some of the attendees aside, is understandable. But I did want Ben to sort of be a Hagrid and do a care of magical reports. So Ben is the next stage of the journey. You know, we've met Louise, who has explained why we need to do this. And then we've spoken to Dan about, you know, how on earth do we get this in some form of vaguely understandable format? I mean, I don't understand the science behind it, but, you know, it gets there. So Ben, what happens now?
Sure. And you've made me almost want to put on my Hagrid voice I do when I read Harry Potter to my children, but I will save the audience from that, my terrible West Country accent. Yeah, so the next stage is scrutiny, and Dan, you've mentioned it there, right? You know, we've got platforms that do a very, very good job of getting all of the data, putting it, you know, getting everything from exchanges, from wallets, and putting it all in one place. But ironically, given the title of this, there's a story there. There's a story to all of those transactions. There's a story to the data. So the next thing that we have to do is scrutinize that data, make sure that data is complete, right? There's an aggregation and there's a reconciliation part to those reports. And it is, you know, Dan, you've mentioned earlier on about like APIs, for example, and the difficulty of getting that from the exchanges. And to mirror what, you know, certainly Louise and Mark have already said, and I know apparently the shill isn't over because I'm still shilling us as advisors. The problems of not having a specialist crypto advisor is you get too many people that will hold themselves out to be specialists, that will probably put all the information onto a tax calculator, and they'll put the number that gives them onto a report. And I would certainly say if you're using an accountant and you're giving them, like, you know, access to this information and they just turn around and go, here's your tax return without having asked you any questions, unless all you've done is hold a bag of Bitcoin for 12 months, something is probably wrong. Because there are so many questions, you know, time and time again, we'll have clients that will be like, grand, I've put all my wallets on, there's 20 wallets, and we'll look through it and you'll go, cool, I think you've actually got about 60 wallets. They go, oh yeah, I forgot about those wallets. And it's easy to do because it's so easy to spin up a wallet. I don't think it's any form of kind of negligence or trying to avoid the tax man. It's just, there's so much data in this space, you need that reconciliation to make sure that story is right. And certainly, as you've alluded to there, Dan, right, you know, you can have clients with 400,000. We've got a client that does 6 transactions per second, and that data is unimaginable. And it's really sad that I'm saying that with a smile on my face, because these are kind of fun problems, right? These are problems that we have to solve. But the volume of data, I've gone off point, I don't know what I was thinking. I was getting to the volume of data, got too excited about the numbers, I've forgotten what I was going to say. But the sheer quantum of data involved within that as well poses a lot of difficulties, and you do need to go through, and you need to have a story we have stories with our clients. We'll go, look, the data is saying this, the software might be saying that, but let's actually have a discussion about what happened. And that's what we need to do, because I've got to my point, I've remembered it while I was saying it. With that volume of data, if you're going to send that information in, and HMRC are going to get a report that says, hey, look, I've done 400,000 transactions, do you think anyone's going to go through those 400,000 transactions to make sure that what is in that report is actually correct? No, of course they're not. They're not going to look at one line and go, actually, we think this gain has not been reported correctly. At the moment, we're very much in the stage of, thanks very much, you've actually come forward and paid some crypto tax. Now, don't get me wrong, as I'm sure Jamie will talk about later, those times they are changing. But the difficulty of not using a specialist tax advisor as well is if you're not looking through that data and you're not reconciling it, there's a high degree of negligence occurring. Because how do you know that what that's actually coming out as and what you're putting onto a return is actually accurate and is actually your accurate tax that you have to pay? These things are important. And as we've mentioned before, HMRC are obviously becoming a lot more, what's the word I'm looking for? I don't know. We've got boxes on our tax returns now for crypto tax, right? For crypto, for chargeable gains. They were historically always in other capital gains, but now we've got a lovely little box for crypto-specific capital gains. But I think there's only, is there 5 little boxes to put the volumes of transactions in, which I feel is an oversight for some people out there. But thankfully it's more than 2, but now we're having to disclose the number of disposals that we make in a year, and obviously we're providing more data to HMRC, so they're getting more information about what is going on, and obviously I don't need to tell anyone here what they're likely to do with that. I think that probably ends the Hagrid Hogwarts lesson of magical internet money from my perspective, I think.
No, I think it was, I like the way that you even faked a mental blackout to try and channel your inner
real. That was
Hagrid.
fully real.
I was really getting into the character.
Should have said that.
No, I think you're right. I think one of these areas that we do struggle with, as you say, is the UK is not built for crypto reporting. We don't have the infrastructure. We don't have the experts at HMRC. You try and call them, and if you eventually get through, it's very unlikely that the person you're speaking to will be able to answer. And like all stories, we need a villain. I'm about to turn to Jamie. Jamie's not the villain. Jamie's going to sort the villain out.
Jamie the one without any name, though? Because there is a character in the book without a name, and I feel that was a direct reference, and you gave him a name.
Jamie is the perfect defense against the dark arts teacher. Obviously, as has already been mentioned, he's a keen drummer, and in his spare time collects a lot of mutant NFTs. So, to round this off, we've got to a point now where we've done what we can and we hand everything over to HMRC, or we don't. Perhaps we choose not to hand everything over to HMRC. What is the best way, Jamie? How do we protect ourselves? Because obviously, as a normal person, we were talking about this just beforehand, we have clients who get letters from HMRC saying, we know all about you, tell us everything, or we're throwing you away, for 30 years in prison. How do you best protect yourself? And what happens if you are, unfortunately, a recipient of one of these letters?
So, on the theme that HMRC are the dark arts in this case, and we're trying to defend ourselves, before we even get to that point, once we've established whether we need an expert or not, once we've definitely used software of some kind, here's one that you can easily get hold of, once we then reconcile the data, you need to defend yourself against investigation, compliance checks, and all sorts. So one of the things you want to do is make sure you have enough records on file so that in the case that you were to get some sort of inquiry, you already have that defensive spell, if you like, ready to send straight to HMRC. Now, I believe there is someone in the audience that actually helped write what this list is with HMRC as to what they were looking for. And the things they tend to ask for is for all CSV files, for starters, or your wallets, anything you may have purchased via crypto, because that's a disposal. They also ask if you have any staking, rewards, mining, etc. So if you have the answers to those questions already, in the case where you do have something like an inquiry from HMRC, you are already prepared. Now, on the flip side, if you weren't prepared and you didn't get an expert and you didn't do your reconciliation, what is the stick? Because we've got the carrot, what is the stick? Initially, there's some interest. Okay, so we've got about 5% above base rate interest for HMRC per annum, so it is punitive and relative to the amount of liability that you owe. So the more you owe, the more interest you pay. On top of that, you've got late filing penalties as well, which start at £100 for the first 3 months, and then it's £10 a day up to 90 days, and then it goes up to £300 or 5% of your liability, whichever's higher, and then after 3 months again, so total 12 months, it's another £300 or 5% of your liability, whichever is higher. So we're starting to rack up a bill here just for non-compliance. On top of all this, if you are also deemed to be purposely hiding stuff from HMRC, and they have come forward to you, not the other way around, you could be slapped with another 100% penalty on top of all this. Who wants that? Put your hand up if you want any of that. Of course you don't. Absolutely not. You're probably not my client in that case. So, it doesn't matter who you are. It's going to be somewhat painful. if you do not prepare. Now, can you get out of these? Sometimes. Interest, not so much. But if you have a reasonable excuse as to why it was never filed in the first place, you might be able to get out of those. And these can be significant amounts, as just discussed. With CARF coming in, I personally think that this is going to cause a bigger issue than they're trying to solve. So CARF, as Louise and everyone else has touched upon, is the Crypto Asset Reporting Framework. And essentially, how it works is RCAS, so this is Reporting Crypto Assets Service Providers, RCASPs, who tend to be centralized exchanges. They don't have to be, they can be brokers or something like centralized exchanges. They will have an obligation to report to HMRC, if necessary, on your holdings. They will also have an obligation to ask, say, you, for example, if you were interacting with the centralized exchange, sorry for picking on you, for your national insurance number or your UTR number. So they're getting really personal with your own data now. On one side, it's going to capture a lot of people that are maybe on purpose or accidentally avoiding and evading taxes. Okay, I get that. Fair enough. On the other side, they won't see anything on chain on your self-custody wallets unless they go actively looking. So if you can imagine for a second there, say you've got £50,000 worth of Ethereum or Bitcoin on your centralized exchange. It would not be uncommon, I would say, for you to send that to your self-custody wallet for any reason, right? Maybe you want to buy a mutant ape or bored ape or a handful perhaps. But it's not uncommon to do that. Now, HMRC won't necessarily see that, and well, they'll see that, but they won't necessarily know that this is your wallet. They won't know that. So I think there's going to be a case where HMRC is sending letters in the future going, excuse me, I think you have some taxes to pay because you've sent 50 grand across there. Can you please deal with this? And you're going, no, 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 no. This is my wallet over here. And they might say you have to prove it. So there's a lot going on that could be problematic. And I don't think it will affect most people within the UK. As long as you're doing your best, you're giving it your best shot, you're trying to remain compliant, you should be okay. And if you're really struggling, if only there was somewhere where you could listen to some experts in the room and ask some questions to help you. And if you're really struggling, I know Ben was shilling his book earlier on. I'm definitely going to get one myself. But I'm going to shill us. If you really need us or want us, come say hi. I'm sure we're happy to have a chat and save you from what could be before we even get there.
Can I quickly add something on the end there? Because what Jamie said is really, really pertinent. I think one of the other issues about CARF, right, is where you've got individuals that might be, we see so many people time and time again that will be like, oh, my grandparents gave me like 20 grand to invest in Bitcoin. Or you've got a startup that's struggling to get an account with an exchange in their business name, so they'll put it through their personal name. And if you think these RCASPs are providing data, someone could come along and go, oh, Ben, you've effectively sold 100 grand worth of cryptocurrency. You haven't reported that on your tax return. And I'd be like, oh, well, you know, actually that was for the business, but it was in my personal name. Like suddenly the way that we are interacting with exchanges, the narrative behind it, the documentation that we need to have to justify the things that we do, as Jamie was saying, needs to be a lot more, perhaps, refined. Sorry, I was just going to add that on the end of what you were saying.
No, you're absolutely right. And I think the whole process, especially for us who are at the cutting edge of all of this, we're going to change our processes going forward to mitigate all this. And that's what we're trying to portray with you guys, because you don't have to use a specialist, but you do have to look after yourself for exactly these reasons, yeah.
I think just a couple of points, and then we've got 5 minutes for questions if anyone has them. I think interest is one of those things, as Jamie mentioned. It is very hard to negotiate interest, and it is potentially horrific. I once had a client who managed to rack up an interest rate of 271% on their tax, which, because interest isn't capped at the value of the asset. That's particularly relevant in crypto. And the other point I was going to make is that often crypto liabilities are what are called dry liabilities. So it's not something that you've generated cash, and you haven't necessarily got cash available to pay the tax. If you were looking at your portfolio to pay the tax, and obviously portfolios go up, portfolios go down. Right? More recently than not, down seems to be the unidirection of travel. And it can be very difficult if you've set aside money for paying that, but kept that in Bitcoin, ETH, some other asset with a variable rate. You don't have any idea how much of your portfolio you may need to set aside for a liability. Obviously, you can use stablecoins. And the other thing I was just going to say very briefly is that professional advisors are always guilty of using acronyms. It's because we speak to each other and it's so dull, we try and shorten everything as much as possible. So when Jamie said that HMRC would ask for your UTI number, to be very clear, this is not a personal medical question, that's your unique taxpayer identifier. So that is the kind of information that HMRC would want. But as I say, we have 5 minutes left, so if anyone has any questions, please do let us know, and somebody will come to you with a mic, or I'll pass you mine.
Two questions, please. One, do we get reporting on cold wallets, like Ledger, etc.? Cold wallets, like Ledger, so is it also getting reported to HMRC?
No, it won't be. It will only be centralized exchanges or anything that comes under as an RCASP.
Yeah,
so
like
something that's
Nexo,
centralized.
Kraken, Coinbase, yeah?
Yeah, anything that's centralized, where they have a legal entity, effectively, it will be reported. One thing I think to be aware of on the cold storage and self-custody side is all of your interactions are on public blockchains, right? So right now, that information, you know, it's pseudonymous. It's on the blockchain. HMRC aren't really looking at it, but we've seen how AI has come about over the past 3 years. Will they have tools, resources to correlate your on-chain activity with your on-exchange activity in the future? Probably, right? So you've still got to come forward with it to stay compliant.
Yeah, I don't think it will be a question of if they're going to be able to do it. I think it's a question of when they'll be able to kind of link your ledger, let's say, for example, Tangent, whatever it is, to your centralized exchanges, and then maybe kind of build a picture. But this is exactly the problem I was talking about earlier on. I think the problem is that they can't do that so easily, and that's going to cause more problems.
And that is going to lead to more complexity because, as has already been said, if money comes off a central exchange into your Ledger wallet, they are very quickly going to be able to know that that is your wallet, the address. This brings in problems that we don't have time to discuss today, for example, data privacy. Data privacy laws, you've all heard of GDPR, CCPA, and all those various others. They are relevant or more relevant when you can identify or ought to be able to identify the owner of something. So the more data HMRC get on you, the more they can map all of your crypto, whether it be on-chain, off-chain, and everything else. It is a snowball going to create an avalanche.
And the last question. So it seems to me, I'm not an accountant, the way forward could be to have a company instead of individual who holds crypto. For example, for me, I have director's loan for my property business. And say if it's £1 million director loan, I don't have to pay tax on it, right? So if I use this money to buy crypto, then, right, it's
depends. If that director's loan, yeah, I know. If that director's loan is outstanding for effectively more than 9 months after your year end, you'll have what's called a Section 455 tax charge on that amount because it will basically be treated as a distribution to yourself. So that would be quite, I mean, that's not to say you cannot take money out of a business to purchase crypto. That doesn't necessarily change what we're talking about here. It would be the same as if the company had bought the crypto as far as reporting and the tax obligations go. But very specifically on the loan case, it's not necessarily tax-free. But happy to talk about that later. Can I also say, I was going to just quickly say after the last question, that HMRC are using blockchain analytical tools, right? They are implementing these things. This idea that actually they won't be able to ascertain certain things is not technically true. They're probably a lot more advanced than people realize. Yeah, and just in the last 30 seconds, obviously we are aware in the UK that we have a budget coming up next month. Don't think even the most optimistic person is looking forward to it. Maybe only Dion is looking forward to it because he does love budgets. But one of the crucial things that we have in the UK is a large differential in tax between income and capital gain. Okay, you're talking nearly a twofold margin of difference, and that may well change in the budget. But one of the things that Louise was talking about earlier, and I cannot overemphasize, is trying to work out what of your crypto is income and what of your crypto is capital. Because the last thing you want to do is work on the basis that your crypto is capital, work out your tax liability,
disclose all of that after you've been through this process, and then for HMRC say, I'm really sorry, that was derived from your employment income and the tax rate is going to be double, and you now owe a lot more money. So I think just talking about the use of a company and different ways to fund the company, that will have implications for the nature of the underlying crypto and how it is taxed. But it is 10:33 on the dot, which is when I was asked to wrap up. So on behalf of all of us, thank you very much.